Afternoon, March 15th, Fed Day, PM Path Chat covering the futures markets, covering equity indices, metals, energy, and the like. This is Bob Iacchino, along with Mike Arnold from Path Trading Partners. Like I said, it was Fed Day. The Fed did what was expected, raised interest rates from a Fed target range of 50 to 75 basis points, which is 0.5% to 0.75% for those of you that don't know, up to 75 basis points to 100 basis points. So that's 0.75% to 1%. So you can just call the median Fed funds target rate now 87.5 basis points. What happened then? Well, Treasury yields fell. The stock market rallied. The dollar fell. And the reason essentially is because the statement and the press conference had enough to make everybody happy. The dot plots, which is where all the individual Fed members think rates are going to within that year, did not change much at all. So the Fed is still signaling 2 more rate hikes by the end of the year. They said they're close to their unemployment target. They are close to their inflation targets. The risks are roughly balanced. The only real hawkish thing you could pull out of there is they went from saying that capital spending was muted to capital spending has picked up a little bit. That's about it. The rest of it was all basically the same measured tone that the Fed has taken. Now, this is what Mike and I said would happen. This is what we said they would say. We said they wouldn't give us any guidance at all other than the guidance we already have. And that's what they do. If they think another rate hike is necessary, they will do exactly what they did at this meeting. They'll start sending out Fed speakers to their pre-scheduled speaking engagements, and they will start talking about how it's likely to pick up. They won't do it in the kind of atmosphere or environment that they just had with the press conference and with the statement. That's just not how this particular Fed works. If you want to know what the Fed is going to do, listen to what the Fed says. And that stands more for this Fed than the Bernanke Fed and especially the Greenspan Fed. These guys seem to say what they want to do. So again, the market seemed to be prepping itself for a much more hawkish tone. I'm going to turn it over to Mike, and he can show you what the market actually did and what he thinks it's going to do.
Okay, great. Thank you very much, Bob. So in our last Path Chat yesterday afternoon, we talked about a lot of these little daily double bottoms in the stocks and the Dow, which you see on my chart now. We closed above the peak, so I would expect this pattern is going to play out with its probabilities for us to rally and return to 21,103. That's what I will be watching for. Let's just go over some of these S&P. Zoom in a bit here. You can see closed above there. Now this is a dual target. First target about 2392. Second target 2398. So those are the 2 targets we're looking for on that. Finally, the Nasdaq, which did not have a double, got above its most recent highs, and the next major level on the Nasdaq is the 5467 level. Let's switch over to crude. Crude, we talked about if we rallied up, watch for a retest of some key levels, including the 48.77, which is where we essentially opened the day, sold down and closed higher, and a kiss the trend line goodbye move, which is what we've done today. This trend line is now an official redraw. This one is no more because it pretty much fulfilled. A bunch of it went down close to the breakout zones. That's done with now. So nothing else to report really with crude. If we continue to rally, the declining 8 rotation zone comes in at roughly 49.61, which is the next GAN level higher. And then if on a very strong rally, the next level is 50.45. If we turn back down, watch for potential support between 48.34 and today's low price, which was 48.16. Then next support is 47.93. Then we have a rising trend line. Just a little quick update for all those crude traders. Copper continued in rally mode. So next key levels higher that I'm really watching for. I'm watching for pretty significant resistance between the 269 to 272 levels, which is a very key GAN rotation zone coming up, which will provide fair amount of resistance. So we also have a trend line coming in the middle of that. If we do go lower, watch for support around 265.34 and then back down to about 262 to 44 to 263.55. Gold, which we also rallied with today, pretty strong rally, went back to the prior key resistance zone that became support. Support was broken, and now we've retested that again. Gold also formed this very small double, okay? So if any of you know our parameters, you can watch for that to fulfill the levels or slightly higher. If we do continue in strong rally mode, next area I'm watching for is 1229 to 1230 for resistance. If we go down and are looking for support, my next key support level is going to be right down around the 1204 level. Finally, silver. Silver also in rally mode, went up through the 1725. We're in a rotation zone. We have a curving over 50-day exponential moving average. So there's going to be a lot of resistance around 1746. And if we do get above there, my next target is 1768. Should we pull back, watch for support at 1725, then right around 1703 to 1710. That's all we have for you guys. Back to you, Bob.
Thank you, Michael. Check in with us tomorrow on the FX side of things, tomorrow morning, as obviously there's been some FX moves, but things like the Aussie dollar, for example, there's some big numbers in some of the other currencies. So check in with us tomorrow on the FX side. We could have some more comments on the fundamental side, but definitely you're going to want to see what happened with the currencies. This is Bob Iacchino. Thanks, Mike, and thanks for watching. We'll see you soon.